Meteorologist Jason Caterina on AM 560, The Answer.
Get the latest weather, traffic, and news updates online at 560theanswer.com. Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft on AM 560, The Answer.
Top of the morning, Dan Proft here, and President Trump force-feeding the Wall Street Journal editorial board crow, writing in an op-ed that his tariffs have brought America back, quoting from the president's editorial, "When I imposed historic tariffs on nearly all foreign countries last April, the critics said my policies would cause a global economic meltdown. Instead, they have created an American economic miracle, and we're quickly building the greatest economy in the history of the world, with other countries doing just fine." Countless so-called experts, including those featured regularly in the Wall Street Journal, predicted confidently that the Trump tariffs would crash stock markets, crush economic growth, cause massive inflation, destroy American exports, and trigger a worldwide recession. 9 months later, the results are in. Every one of those predictions has proven completely and totally wrong. Since I was elected in 2024, we've had 52 stock market highs with virtually no inflation. There has never been anything like it. The entire Trump agenda, he goes on to say, deserves credit for this explosion of growth, talking about third quarter and projected growth, fourth quarter and projected growth first quarter this year. The entire Trump economic agenda deserves credit for this explosion of growth and good news, including our record tax cuts, unprecedented regulation cuts, pro-American energy policies, and much more. But without question, the credit for this economic success must go to what the journal itself described as the largest economic policy shock, quote unquote, in more than 50 years, my tariffs. We have proven decisively that properly applied, tariffs do not hurt growth. They promote growth and greatness, just as I said all along. Take that, free traders, like me. Okay. Well, before I opine, let's hear from an expert, one of those so-called experts, I should add. Scott the Cow Guy Shellady, market specialist for Market Day Report, 10:30 to 1, and host of the Cow Guy Close, 1 to 1:30, both at RFD-TV. Scott?
Good morning.
Morning. The tariffs brought America back, and the so-called experts promoting free trade, like yours truly, are all wet.
Look, I'm for free trade as well, but I'm not for free trade if they're tariffing us and we're not tariffing them. I want a free trade first and then fair trade second. That's all, and I think that's common sense. I think everybody would agree with that. And living abroad like I have done for 16 years. Some people say living as a broad for 16 years, but that's a whole other show.
Yeah, what you do in England is your business. Yeah.
Right, exactly. On Fridays and Saturdays only. I saw America get ripped off every day. And it used to make me angry. And so, yeah, I'm 100% free trade, but if you're going to tariff us, I'm 100% for, reciprocal tariffs, which would be, fair trade. So, and you know what? The guy deserved a chance, and it's undeniable. I mean, by every metric, we're growing very, quickly. I mean, we've got over a 5% GDP, 5.3 at last check, and arguably, as Kesman Hassett says, we'd be approaching 7% in the last quarter if it wasn't for the government shutdown. I mean, those are hard to argue with. And you look at the corporate earnings, they're going to be double digits. I mean, there's a lot of things to celebrate. Now, the problem he's got is this K-shaped economy. The upper 10, 15, 20% are doing much better than, say, the lower 85%. And that's a problem that he's going to have to try to work on. And I think he's trying. I don't know if it'll work, but he's got to do something before November.
Well, in my defense, too, one of the things I said, which I didn't get too crazed by, Liberation Day and the imposition of these tariffs, is that I thought that the net of this would end up being using America's economic leverage to reduce tariff barriers with our significant trading partners and producing a marginal benefit, even though taxes are not the way that you generate economic growth, and that's what a tariff is. But things like what was announced yesterday, that he is cutting tariffs on India down to 18% because there's a new framework for a new trade deal with India, and this has been sort of the back of the seat approach that he has taken with respect to negotiating these deals that are on again, off again, or frameworks for deals, as is more often the phrase that's used, that are on again, off again. And it suggests that there is not going to be a cessation of trade. This is not going to be Fortress America. It's just trying to, as I said, leverage to get to a more free trade environment with lower barriers, including taxes, and other trade barriers across the board. And that's a good thing.
Yeah, and he's been successful not only doing that, economically with trade, but he's been able to use tariffs as a geopolitical tool and getting policy done too. I mean, not economic policy, but everything else. So he's, the guy deserved a chance after the disaster we had the first 4 years, before him.
Yeah.
And let him take a swing at the bat. And and by the way, a lot of things that don't go reported, Dan, this one big beautiful bill, whatever you want to call it, there are some things in there that are already starting to show up, and they're going to be a big boost to our economy. Namely, two things for small businesses when it comes to expensing and depreciation. Those things are going to really, really help out. And then you combine the fact that he's going to have a dovish Fed, and there's just a lot of things in there that I like. And we got caught off guard right away with some things like Venezuela happening. We've got Greenland still, so there's people that have some mild trepidation about the markets. But generally speaking, even the people I think that sit in the center and are not left or right would say that things, economically speaking, are setting up to look okay.
Talk to me and us about gold and silver and crypto. What is your handle on the volatility there?
Okay, well, I mean, they're commodities. Let's get that straight. That's the first thing we have to remember. But number two is, I'll say gold, and not really silver as much, but the metals. The gold really is a big one. The two main reasons while I was going through, economics classes and finance at Boulder, University of Colorado, would have been that's a store of wealth. If we've got inflationary times, you want to buy gold. So it's a hedge against inflation to keep your dollar strong, but it's also a place to put your money in times of Armageddon or chaos. I don't think that's happening, but there are people out there that do definitely think that we've got some sort of chaos going on because of, let's say, it's going on in Minneapolis or Los Angeles and the likes. So those two reasons have always been there. There's a third reason that's cropped up lately, and that's anybody that copied us and what we did over COVID. They don't trust Western currencies anymore, this dollar debasement trade. People are flocking to things that you can see, you can hold, you can look at, rather than worry about what's going to happen to my dollar or anything else, any other Western currency that followed us into this spend until our head caves in policy after COVID. So the dollar debasement trade and those two, chaos and inflation are the three reasons why you might want to own those things. And then there's a fourth when it comes to silver. We're generally short it. There's a shortage of it because of what's been happening with technology and what it's used for as far as conducting electricity. Now, having said all that, those are all knowns. We've known that for a year, 2 years, whatever. So why, in the last year, would you see a 4X change in, say, silver when you knew all those things already existed? And the problem is this. We've got financial leverage out there in the looks that are ETFs, exchange-traded funds. These things are attracting so much capital to these commodities that are finite that when you see that much money flow into the system, it just can't handle it. And it turns those things into meme stocks. All of a sudden, you're trading AMC or GameStop. You're not trading silver or gold anymore. That's what's really bottom line happened. It's divorced itself from reality, and they've turned into meme stocks because the amount of capital through ETFs and the likes that have come into the system, and those products just can't handle it like other things can, and it turns them into meme stocks. Look at the charts. I was speaking at Purdue University on Thursday. Everybody's beating me up over it. Why aren't you on board? Why aren't you on board? And the answer I gave all was, I'll let you make or lose all your money in the gold and silver market. I'm not touching it with a 10-foot pole. I've been around 39 years. You look at those charts, it should make you throw up. Well, lo and behold, on Friday, I got good timing. Those things all fell out of bed. Now, who knows if they bounce back? There's a lot of people that think they will, and I don't care. I'm still not going to get involved. I didn't get involved in Bitcoin. So far, that saved me some money as well. They have turned into meme stocks. The amount of capital cannot be absorbed, and that is why you're seeing the volatility bottom line.
Well, I want to fold in Bitcoin and crypto. But first, this is what President Trump had to say from the Oval Office about it yesterday. I want to get your take on whether or not Bitcoin is now falling out of favor as gold and silver become these meme stocks, as you were describing, and if the president's characterization of our support for crypto, the parallel he uses, is right. Take a listen.
Mr. President, the Wall Street Journal reported that the royal family of Abu Dhabi invested hundreds of millions of dollars in your World Liberty Financial. Can you explain why you decided to take that investment? Was that a transaction?
Well, I don't know about it. I know that crypto is a big thing, and they like it. A lot of people like it. The people behind me like it. My sons are handling that. My family is handling it. And I guess they get investments from different people, but I'm not. I have all I can handle right now with Iran and with Russia and Ukraine and with all the things we're doing. So I don't know exactly, other than, I'm a big crypto person. I'm the one that probably helped crypto more than anybody because I believe in it. And the reason I believe in it is because if we don't do it, Scott, I think we can say then China's going to do it. Right?
Yes, sir.
If we don't do crypto, then China's going to do it. And it's just like AI. We're leading AI by a lot. And if we weren't leading, China would have led. They're very capable. They're very good.
So setting aside the conflict of interest with the family for a second, which is concerning, frankly, the comparison to AI and that if we're not leading crypto, somebody is going to, is this something that we need to be worrying about leading from a federal government perspective?
I struggle with that myself because, let's just rewind our clocks back 10 years. When Bitcoin was the rage in gold and silver, especially gold, was just laid there. I've been doing this a long time. I remember I had customers in 2010 that by the time 2018 came around, they finally had a break-even party for their gold position.
Yeah.
Because gold didn't do anything, but crypto was all the rage because that was where everybody was expressing their views on the U.S. Economy and the likes. But the use case for crypto has really kind of faded, not because there isn't going to be one, but it's just today it's harder to make a use case argument for crypto right now. And I think that's why people kind of woke up. Yeah, it might be a good idea down the road, and it might be a great idea to make sure that we're a leader in it. But the reason why gold and silver, like I said, have really come to the fore is you can go to Costco and buy a gold bar. Well, where do you go buy your crypto unless you go to an exchange? And how do you look at it and handle it? Is it on a piece of paper? The use case for crypto is still being built. I think there are some great reasons to be a leader in it, but I don't think it has to happen tomorrow as much as people think it does. And I think that's why it's trading at 77,000 today when it got up to 126.
And do you think that it is going to continue to decline, perhaps precipitously?
I think that's going to be part of the market psychology. I still have never owned it. I remember when it was 5,000 or 6,000, I was kicking myself, and there was a lot of people bragging when it went over 100 and 120. I still wouldn't touch it at 77,000. I want to wait and see. Now, you talk to a gold or a silver bug, they think it's going to zero. You talk to a crypto person, they think it'll go to 1 million. So there's still so much, such a wide expectation of where that'll go. That's why I don't want to touch it. And I have an old adage, Dan. If you go down and stop 10 people on the street, you ask them if they've heard of Bitcoin, they all will probably say yes. And then you ask them what it does, and probably two know what it does, what it really is. And then you ask them if anybody owns one, and it's probably one. It's still really not mainstream. And that's why I think the rush to get into it, to me, I'm going to go slowly. I'd rather miss out on an opportunity than be long from 126 going down to 77. And then number two is there's still people that really like to go to Costco, buy that gold. I think that's a fool's errand too, by the way, because right now that really feels good to go buy that gold bar at Costco, put it on your desk, look at it, feel it, touch it, and you feel like you're a real smart person. But let me trust me, when it comes time to sell your gold, you're probably going to be doing it when everybody else wants to do it. And the line out the pawn shop or that jewelry store to sell your gold is going to be a mile long, and you're not getting anywhere near the price you think you're going to get. So it's easy to, gold right now to me is the Hotel California trade. You can check out, but you can never leave.
Talk to me then about your broader view on the market. You mentioned some of things coming with the BBB, like expensing, which is really important to like small manufacturing. Are we going to see a broadening of positive results in the market? And if we don't, can the Magnificent Seven hold up, or do you see, what's fleshing out in AI right now potentially imperiling NVIDIA and other members of the Magnificent Seven from continuing to carry the weight they've carried?
Well, in all, just full disclosure, I own Tesla and I own NVIDIA and I own CoreWeave. And I bought those after the big hiccup April 2nd last year. I had missed that run up and I got on board, and I'm glad I did finally now. I'm a big fan of AI, but I'm not overly, I don't have rose-colored lenses on. I can see that there's going to be some hiccups along the way. But I think this transition out of AI into other things, I understand it, but I still believe that it is going to be so transformative, and it's probably the best opportunity for investors that we've had in probably 40 or 50 years. It's nowhere near really. I don't even think we're in the second inning now. The CIO of the Americas for UBS yesterday over the weekend at a Latin conference said she believed it's probably the most underhyped, underappreciated trade in the world, and you're not going to get another opportunity. I totally agree with that, but we have to go with the ebbs and flows of people thinking that the AI trade's over. So it gets hit a little bit when people, transition out to other things. They call them average Joe stocks like energies and consumer staples, and that's fine. Those things will all get a bump from AI as well, but I still believe and then there's another thing that people are calling me wrong on too, but I still believe that it's going to be so transformative. It's not going to be like the .com. I think it's going to be bigger than that. Now, the thing that I really take a lot of heat on, Dan, is I don't believe that we're going to see jobs created, at least in the short term, like a lot of people say. This is just going to be like any other technology or the Industrial Revolution. This artificial intelligence, machines, and robots lately have been built to take the job away from the human. It hasn't been an add-on to the human. It's been basically to take the job away. Now, maybe there's some cottage industries that pop up from that, or maybe some other different things. But right now, I think that the Fed is probably right to be focusing on jobs. I see the cracks in it, and I think AI is going to be the leader there. Look, Amazon just fired 30,000 people in the last 6 weeks. That should tell you something. And
so you're long AI, and that means long the chip makers, starting with NVIDIA.
Yes. I think that there's still a long way to go there.
Scott the Cow Guy Shellady, market specialist, Market Day Report, 10:30 to 1. Also the host of the Cow Guy Close, 1 to 1:30, both at RFD-TV. Scott the Cow Guy, thank you as always.
All right, have a great day, guys.
You too. And Scott the Cow Guy joined us on Chicago's Morning Answer.
There's only one radio show in Chicago talking about today's biggest stories and telling you what they really mean. That show is this one, Chicago's Morning Answer on AM 560, The Answer.
This is Dennis Prager for AmFed Coin and Bullion. There's something about the feel of a gold coin in your hand and the way the light reflects off its intricate details that has always captivated me. Nick Grovich, AmFed's owner, turned that same passion into his livelihood. Nick began collecting coins as a teen, and that interest grew into a nationally respected business offering only the finest quality coins.